On April 2, 2025, the world watched as the United States, once a champion of free trade, took a sharp turn towards protectionism. President Trump announced sweeping reciprocal tariffs on a wide range of goods from numerous countries. This decision has ignited a firestorm of reactions, ranging from outrage to cautious optimism. The Trump administration has long advocated for a more protectionist stance on trade, arguing that existing agreements have been detrimental to American workers and businesses. The president has repeatedly accused trading partners of unfair practices, currency manipulation, and intellectual property theft. These tariffs, according to the administration, are a necessary measure to protect American interests and level the playing field. The list of targeted countries reads like a who's who of the global economy, encompassing major allies like the European Union and Japan, as well as emerging economies like India and Vietnam. The tariffs themselves are substantial, ranging from 10% to a staggering 46% on certain goods. The implications of this decision are far-reaching, with the potential to reshape global trade patterns and ignite a trade war of unprecedented proportions. The tariffs announced by the Trump administration target a dizzying array of goods from across the globe. China faces some of the highest tariffs, with a 34% levy imposed on a wide range of goods. The European Union, another major trading partner of the United States, has not been spared. A 20% tariff has been imposed on goods from the bloc, further escalating trade tensions. Japan faces a 24% tariff, while South Korea grapples with a 25% levy on its exports to the U.S. Vietnam, a rapidly growing economy heavily reliant on exports to the United States, faces a hefty 46% tariff. Even close allies like the United Kingdom have not been entirely exempt, with a 10% tariff imposed on their goods. These tariffs, affecting a wide range of products from automobiles to electronics to agricultural produce, are a testament to the administration's commitment to reshape global trade in favor of American interests. The White House has defended its decision as a necessary measure to protect American jobs, businesses, and consumers. Central to their argument is the claim that existing trade deals have been disastrous for the United States, leading to the outsourcing of jobs, a decline in manufacturing, and a widening trade deficit. The administration argues that these tariffs are designed to level the playing field by forcing trading partners to offer more reciprocal terms of trade. They point to practices like currency manipulation, intellectual property theft, and unfair subsidies, which they claim have placed American businesses at a disadvantage. By making imported goods more expensive, the administration aims to incentivize consumers to buy American-made products, thereby boosting domestic production and creating jobs. The White House also argues that these tariffs will generate much-needed revenue for the U.S. government. The reaction to President Trump's tariff announcement has been swift and largely negative. Governments, businesses, and international organizations around the world have expressed deep concern about the potential impact of these tariffs on the global economy. China, the European Union, and Canada, among others, have condemned the tariffs as protectionist and a threat to the rules-based trading system. They have vowed to retaliate with tariffs of their own, raising the specter of a tit-for-tat trade war that could escalate rapidly and damage the global economy. The International Monetary Fund has warned that the tariffs could undermine global growth, disrupt supply chains, and lead to higher prices for consumers. The World Trade Organization has also expressed concern, urging countries to resolve their differences through dialogue and negotiation, rather than resorting to protectionist measures. Business groups on both sides of the Atlantic have criticized the tariffs, arguing that they will harm businesses, disrupt supply chains, and lead to higher prices for consumers. India, facing a 26% tariff on its exports to the United States, has responded to the announcement with a mix of caution and defiance. The Indian government has stated that it is currently analyzing the potential impact of the tariffs on the Indian economy and will respond in a measured, calibrated, and professional manner. While acknowledging the challenges posed by the tariffs, Indian officials have also expressed confidence in their ability to mitigate the impact. They point to India's growing domestic market and its efforts to diversify its export destinations as factors that will cushion the blow. There is a sense in some quarters that India may even be able to capitalize on the trade tensions between the United States and China. With Chinese goods facing hefty tariffs, Indian businesses may be able to capture market share in the United States by offering competitively priced alternatives. India remains hopeful that the ongoing trade talks between India and the United States will provide an opportunity to address the issue of tariffs and find a mutually agreeable solution. The announcement of these sweeping tariffs has sent shockwaves through the global economy, with immediate impacts being felt in financial markets and commodity prices. Stock markets around the world tumbled in the wake of the announcement, reflecting investor anxiety about the potential for a trade war and its impact on global growth. The tariffs have also introduced significant volatility in commodity markets. Gold, often seen as a safe haven asset during times of economic uncertainty, surged to record highs as investors sought refuge from the turmoil in equity markets. Oil prices, on the other hand, have been under pressure due to concerns that a global trade war could dampen economic growth and reduce demand for energy. The automotive industry, heavily reliant on cross-border supply chains, is particularly vulnerable, with manufacturers facing higher costs for imported parts and components. Consumers, too, are likely to feel the pinch of these tariffs as businesses pass on the increased costs of imported goods in the form of higher prices. The world is entering uncharted territory as the specter of a global trade war looms large. The tariffs imposed by the United States, coupled with retaliatory measures from its trading partners, have set the stage for a protracted and potentially damaging conflict that could have far-reaching consequences for the global economy. The rules-based trading order, painstakingly built over decades, is under unprecedented strain. The principles of free trade, once seen as sacrosanct, are being challenged as nations prioritize their own economic interests above all else. This shift towards protectionism, if left unchecked, could unravel the global trading system, leading to a fragmentation of the global economy and a slowdown in global growth. The path forward is fraught with uncertainty. The possibility of a negotiated settlement, while not entirely off the table, appears increasingly distant as both sides dig in their heels. The global economy is at a crossroads, and the decisions made today will have profound implications for the future of global trade and the prosperity of nations.